Greetings, members, one and all of the Salivation Nation. Gold and silver stay down on positive job numbers. Let's explore. Yes, look at that. This is some interesting numbers here. We're seeing not a whole lot of activity and movement. Gold did creep up just slightly from yesterday's drop. It is still under $1,700 an ounce, and silver has dropped a bit. But we're looking at into the weekend with gold being just below that $1,700 critical number here. In fact, gold futures, they ended below the $1,700 mark, with prices for the precious metal posting a third straight weekly loss. The U.S. dollar index touched its highest level in over 3 months, and Treasury yields briefly topped 1.6% as the latest employment report shows a larger than expected job gains in February. Higher government bond yields and a stronger dollar can make gold less attractive to investors seeking a safe haven. Gold has been pressured by a continued increase in interest rates, making the metal a less attractive store for value relative to bonds. Jason Teed, co-portfolio manager of the Gold Bullion Strategy Fund, told MarketWatch. While inflation was mentioned by the Federal Reserve this week, the interest rate pressure is likely a larger and nearer-term factor than the positive pressure on expected inflation. If interest rates continue to move up upon positive U.S. economic news, gold may continue to come under some selling pressure, but that pressure may abate somewhat if yield movements take a breather. These are not interest rates set by the Federal Reserve, by the way. They're leaving those alone. Gold for April delivery was settling at $1,698.50 an ounce after a loss 0.9% on Thursday. Prices for the most active contract ended at their lowest since June 5th, FactSet data show. May silver futures lost 17 cents, $25.28 an ounce after tumbling 3.5% in the previous session. For the week, gold suffered a 1.8% decline based off the most active contract, and silver futures saw a 4.5% weekly skid. Markets have become increasingly jittery over the prospect of economic growth, leading to higher inflation and resulting in the Federal Reserve interest rates, resulting in the Federal Reserve raising interest rates. Although they didn't do that, the Federal Reserve didn't raise rates. Giving gold zero yielding nature, this development does not bode well for the blowout of U.S. jobs report for February, likely to rub salt into the wound. The numbers did come out better. The U.S. created 379,000 new jobs in February, which is the biggest gain in 4 months, perhaps undercutting some appetite for bullion as the economy looks to be on the recovery path from the COVID-19 pandemic. I think this is due to some of the numbers leveling out and, of course, the vaccines out there. But, of course, the vaccines that are being distributed, there's 3 of them now. The Johnson & Johnson is a single shot, but, there is some concern about some of those vaccines. In fact, it was mentioned that perhaps maybe one of them may be using fetal tissue, which would not be good. But nonetheless, don't know the veracity of that report, but would be concerning if that was the case. The markets keyed off comments from Federal Reserve Chairman Jerome Powell. We talked about this the other day, about a disorderly move in the bond market. He suggested that hadn't yet had a material impact on financial conditions, disappointing some market participants who wanted him to offer more insights about tactics a central bank might employ to tamp down a rise in yields. And also he's kind of also fluffing off or dismissing inflation rates as well too. That it's only going to be a one-time deal. We'll see how that plays out. But nonetheless, this is where the markets are, and this is what's happening with gold. Down somewhat now. It's, as of the recording of this video, it's actually right at $1,700 for the ask price, and then we've got the gold to silver ratio increasing again to now at 67.57. But in a sense, the metals are a little bit depressed right now. as we head into the weekend, and we'll see where things play out in the end. It is interesting to see, and I think that we could consider to see these kind of levels, and it may essentially even out for a while before it goes up again. If there is a increase in economic activity, that means the velocity of money is going to, in turn, cause gold and silver to rise because of inflation, a weakened dollar. And we'll see here. The 10-year Treasury note was up 1.567%, was trading around 1.5% after a high of 1.62, while the U.S. dollar, as gauged by the ICE U.S. dollar index, was up 0.35%, touched a high of 92, the highest level since around November, FactSet data show. So we'll see. And we know copper has really been doing well. It's actually doubled in price over the last weeks to month or so. So it's very interesting to see copper make its move upward. And I think that's kind of a precursor to where silver as a commodity could potentially go. There is still that squeeze in the physical in terms of folks buying gold or buying silver from the Wall Street silver community. I've been browsing around there. It seems like they're unwavered by the drop in silver's price here. And I think that's a good thing as long as you understand it for the long haul and keep sustained buying. But we shall see. Obviously, premiums are still up as well. And we'll see where it goes from this point forward in terms of product that's become available and being sold on the market. Also been hearing that buybacks for silver has gone down, and that some of those premiums, they're not paying as high a premium these days for a generic silver. So that this could be the beginning of kind of the end of that silver squeeze, but we just don't know. It just depends on what product becomes available and how quickly it's soaked up by the Reddit community and those who are buying silver now, either to send a message or concerned about what is coming. As you do so, I caution to be warned that hey, we may see these prices low for some time. I have even called for higher silver prices by the end of the year. I still hold on to that. I think we could see silver for the spot price be around between $30 and $35 an ounce by the end of the year, or at least touch that at some point during the year. We'll see. In gold, I still feel like it could go up and stay up too. It's harder to get to $2,000 gold from here, though, but anything could happen. A lot has happened very quickly on the way down, and I believe they could happen quickly on the way up, too. It's like a house of cards in a sense with the economy these days. It is more fragile than ever before, and there's more liquidity into the market than ever before, and I think that is going to only continue to strengthen, it does not bode well for the dollar index, and it does bode well for precious metals in the medium to long term, I believe. We'll see how it plays out. But there you go. The metals, though, now are down and staying down, heading into the weekend, with a very slight upward tick for gold now. It's now just above $1,700. It looks like it's going to close above that as the evening rolls on here. So there you have it. Let me know your thoughts in the comment section below. I'd like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.